This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices dipped on Monday, after Iran said it had total control, following weekend violence, easing some concerns over supply from the OPEC producer, while investors also weighed efforts to resume oil exports from Venezuela. Brent crude futures lost 9 cents to $63.25 a barrel by 0750 GMT, while U.S. West Texas Intermediate crude was at $59.02 a barrel, down 10 cents. Both benchmarks rose more than 3% last week in their biggest such rise since October, as Iran's clerical establishment stepped up its crackdown on the biggest demonstrations since 2022, though protests escalated over the weekend.
U.S. President Donald Trump signed an executive order aimed at blocking courts or creditors from impounding revenue tied to the sale of Venezuelan oil held in U.S. Treasury accounts, the White House said on Saturday. The emergency order said the revenue, held in foreign government deposit funds, should be used in Venezuela to help create peace, prosperity and stability. The order was signed on Friday, less than a week after U.S. forces captured Venezuelan leader Nicolas Maduro in Caracas. Several companies have long-standing claims against the country. ExxonMobil and ConocoPhillips, for example, left Venezuela nearly 20 years ago after their assets were nationalized. Both are still owed billions of dollars.
Moving on to the top news in the energy sector.
Oil prices are likely to drift lower this year as a wave of supply creates a market surplus, although geopolitical risks tied to Russia, Venezuela and Iran will continue to drive volatility, Goldman Sachs said in a note on Sunday. The investment bank maintained its 2026 average price forecasts of $56 per dollar, $52 per barrel for Brent, WTI, and expects Brent, WTI prices to bottom at $54 per 50 in the last quarter as OECD inventories build up. Rising global oil stocks and our forecast of a 2.3 MBD surplus in 2026 suggest that rebalancing the market likely requires lower oil prices in 2026 to slow down non-OPEC supply growth and support solid demand growth, barring large supply disruptions or OPEC production cuts, Goldman Sachs said.
The German baseload power contract rose on Monday on flagging wind power supply and a small rise in demand. The German day-ahead baseload power contract was at €111, $129.73, per megawatt-hour at 0923 GMT, up 17.7% from the closing price Friday for Monday delivery, LSEG data showed. The equivalent French contract was at €91 per megawatt-hour, down 3.7% from the closing price Friday for Monday delivery. German wind power output is expected to drop by 23.24.5 gigawatts to 22.6 gigawatts on Monday, while French wind power generation is projected to fall by 3.6 gigawatts to 10.7 GW, LSEG data showed. Next, we have the top news in metal markets. A Japanese mining ship departed on Monday for a remote coral atoll to probe mud rich in rare earths, part of Tokyo's drive to curb its reliance on China for critical minerals as Beijing tightens supply. The month-long mission of the test vessel Chikyu near Minamotori Island, some 1,900 kilometers, 1,200 miles, southeast of Tokyo, will mark the world's first attempt to continuously lift rare earth seabed sludge from 6 kilometers, 4 miles, deep onto a ship. Japan, like its Western allies, has been reducing its dependence on China for the minerals vital to the production of cars, smartphones and military equipment, an effort that has taken on urgency amid a major diplomatic dispute with Beijing.
Iron ore futures edged higher on Monday as top consumer China's latest pledge to roll out a package of policies to spur domestic consumption lifted sentiment. The most traded May iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.92% higher at 822 yuan and 50 fen, $117.92, a metric ton. China's cabinet held a meeting on Friday about implementing a package of fiscal and financial policies to boost domestic demand, including initiatives to spur household consumption, state broadcaster CCTV reported.
We will now look at the top news in the agricultural sector.
Chicago wheat, soybeans and corn futures rose on Monday as traders positioned ahead of the closely watched U.S. Department of Agriculture crop reports, while news of more U.S. soybean sales to China also supported. Chicago Board of Trade most active soybeans rose 0.3% to $10.66 minus 1/2 a bushel at 11:49 GMT. Wheat rose 1.2% to $5.23 minus 3/4 a bushel. Corn rose 0.5% to $4.48 a bushel. Dollar weakness, making U.S. grains and oilseeds cheaper in export markets, also supported, along with geopolitical tension.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.